Dear students, welcome to my channel. I am Dr.venkateswarlu, Professor of Accounts and Finance. Let us discuss concept of risk and various types of risk. The concept of risk. Here, risk means the chance of loss or the probability of loss. The present sacrificing income for future returns is known as risk. The present sacrificing income is certain, future return is uncertain. Here we take an example of Mr. X. He is an investor. He would like to invest on XYZ company of rupees 100 on a share. He expected dividend of rupees 10 after 1 month. So today's investment of rupees 100 is a certain risk. Expected dividend of after 1 month may be received, may not be received. So expected dividend is uncertain. Then let us discuss about various types of risk. Here, the types of risk divided into two types: systematic risk and unsystematic risk. Systematic risk means uncontrollable, non-diversifiable risk. And unsystematic risk. Unsystematic risk means controllable and diversifiable risk. Here, systematic risk divided into three types: market risk, interest rate risk, purchasing power risk. Unsystematic risk divided into two types: business risk, financial risk. Business risk happens due to two conditions: internal risk and external risk. Financial risk is credit risk, currency risk, country risk, and liquidity risk. Let us discuss about systematic risk. Systematic risk divided into three types. One is market risk. Market risk is the risk of losses on financial investment caused by adverse price movement. The price movements in the market, the investor or the company will get losses. Then interest rate risk, the potential for investment losses that result from a change in interest rates. If the company investment returns may be changed or influenced by interest rates in market. Then purchasing power risk, the investor's expected income and expected returns on investment is influenced by inflation. The purchasing power risk, purchasing power depends on real income, that is the amount of income a person makes adjusted for inflation. Unsystematic risk. Unsystematic risk is controllable and diversifiable risk. It is divided into two types: business risk and financial risk. Business risk divided into two types: internal risk, external risk. Business risk, the exposure of a company or organization has to factors that will lower its profits. Internal risk, faced by a company from within its organization and arise during the normal operations of the company. Example, R&D failures, employee strikes, lack of funds, and lack of management supervision. Next, external risk. External risk often include economic events that arise from outside the corporate structure. Economic risk such as change in market conditions. Natural risk such as natural disasters like pandemic, tsunamis, earthquakes, and war conditions. Political risk such as international business risk factors, change in the political environment and government policies that could affect financial affairs. Financial risk, the possibility of losing money on an investment or business venture. Some more common and distinct financial risks are credit risk, liquidity risk, and operational risk. Thank you.